Ladies and gentlemen, let me turn this music down. Holy shit. We are live 4 minutes ahead of Powell's FOMC speech. I don't really have a position on president. You can see I have 4 shares. Honestly, I'm just going to dump them because I didn't get any buys through. Okay. What is up? Current positions. Holy dude, projection is going crazy. I guess I'm... Projection in the 30s? Wow. Someone is like market buying projection, or people just pulled bids and now it's pretty illiquid, but holy cow, I can't believe projection is down in the 30s. We sized up pretty big on this Fed speech, you know what I mean? Main positions I'm holding right now. Wow, softening's moving against us, especially with talks of the labor market. So the Fed, by the way, just posted at 2 p.m. If you guys don't, you should be reading this every time they do it. This is their FOMC statement. There were 2 dissents from Moran and Waller. Obviously, they kept rates steady. But what's up, BitBop? Oh, wait, this is the... Overall, do you think Pardon's going to hit with a cough? No, I don't. I don't think Pardon's hitting with cough. Look, main positions I'm on, right now I'm holding no projection. I am holding no probability, no softening. I did want to buy no median. To be honest, I went to bed with some bigger orders last night, and then I was top of book when I went to bed, and I woke up with no fills. So ended up buying some more now. Again, I don't really have yeses for anything. Not that I'm saying to not buy yeses, but you know, pretty across the board on some nos. Main things that I'm focused on with this speech, right, is they're not expected to give any new like economic projections this speech. So that's why things like projection, I do like getting on the no side. And, you know, granted, 2 times ago when they didn't have economic projections, they still brought up projections. So none of these obviously are for sure thing. I just think that there's value. So I kind of have to, you know, take some of these positions. Like I think, for example, like projection no. Wow, I mean, no at still in the 40s. I mean, it was just in the 30s. I don't know. I think fair value there, probably closer to like 60. I mean, maybe you can even argue higher for no, but so I just had to take some there. Wish I would have waited to buy some of the 30s, just seeing where it went before. Softening, I'm a little worried with talks about kind of labor market and everything that maybe this is where it's going to come in. But yeah, most of my plays are just on some of these nodes. I probably should have sized up on some of these, you know, again, bonds not the right term, but just like really low likelihood ones with like more positions. The main unknowns with this that's going to be interesting is that, you know, this is the first Powell speech we get since he launched his message about what Trump, you know, was kind of doing to him in terms of like attacking him with subpoenas and things like that. So there are some unique strikes here. Here we go. Powell's coming out. Let's see if the prototypical good afternoon all the way up to 99, man. Can I get first bond click maybe? Oh, wow. So there's already a much faster stream. Holy. Someone's like 15 seconds ahead. Oh, wow. AP is... Oh, no. I got to be looking at the actual Fed thing. What am I doing with AP? Okay.
2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy
Wow, we have
after
same
briefly
positions?
reviewing economic
You
developments.
must know ball.
Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely
shutdown
weighed on
already.
economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be
softening?
stabilizing
Oh,
after
stabilizing.
a period of gradual softening.
Ah, they're softening.
The
Damn.
unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage
Layoff.
growth,
Oh, they
show
already hit
little
earlier.
change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs.
Goods inflation,
In
tariff
contrast,
inflation coming there.
disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable
volatile
prices for the
doesn't count.
American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 3/4 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of
It
risks.
doesn't count fluoride.
Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored.
You took median
Our
no?
success in delivering on these goals matters to all Americans.
I like median
We
no.
at the
for
Fed will
record,
continue
not
to do our
median
jobs
yes.
with objectivity, integrity, and a deep commitment
But it
to
was
serve
getting
the
kind of
American
priced
people.
out. It was in the 50s before.
Thank you. I look forward to your questions.
All right.
Hi.
If it's not
Rugaber
bonded,
at
you didn't say
Associated
it.
Press. Thank you. I wanted to ask that you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended?
He already hit
and,
layoff,
what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. you mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative.
Wow, the decline in
hiring
projection doesn't make
pace.
sense because it's going to hit in Q&A. It's
So do
amazing.
you see the drop in the unemployment rate as
I
solid?
guess I could try to
and,
sell a little bit right now. I mean,
I'm just,
until
what's the basis
buy
for
a
saying
house,
that
and I'll
things have
definitely trim.
stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in
people
the
are buying.
data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply, it used to say that judges that downside risks to employment rose in recent months. So we saw, data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick.
Gold? Huh. Maybe. I didn't even think about that.
The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement
Okay,
on
so
January 11th
this might be where we
was
can
a
get no
departure.
on Trump.
What made this different, and are you concerned it could draw the institution further into political debates?
So today on, I'm
See
simply
how
going to
much
refer you to the
people are gonna
statement
buy
that I made
Trump.
on January 11. I'm not
I
going to
don't think he's
going
gonna
to
say Trump.
repeat it.
I'm just wondering how much people are going to buy Trump
I'm just not going
if
to,
he gets
this
asked
is
about
really
it.
about the press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Oh, wow. Did subpoena get pretty high?
Mike.
Michael McKee from Bloomberg Radio
wow.
TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not,
still buying
when
them?
might we anticipate a decision?
No,
Damn.
and I really, once again, have nothing for you on that today.
All right, we got
That either.
some. I should have gone bigger.
Why,
Someone
why
was trying
would
to
you,
click on the subpoena
want to
question,
leave
but
it
they're
all
very
under
late.
the circumstances?
Again, I don't want
These
to get into, it's not
questions are
something
funny.
there's a time and
I
place
can't
for
believe
these
I'm
questions, but not something I'm going to be getting into
Well, the
today.
risk with president is Reserve Bank president, to be honest. He does say that, so that's where
Thank
it
you.
could come up.
Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead
Give
to a
it a
similar
try.
answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the U.S. currency lower? And have you been at all concerned just by the extent
Surprised
of
he
the
didn't talk
volatility
about,
we've seen this week? Thank you.
So,
balance sheet on
Claire,
stuff.
as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So I have nothing for you.
But, what's your view on the market movements? What do you think
Look, I
behind
don't
them?
really
Is
have
it
a
asset managers
cash out because
diversifying?
it's
Is
illiquid.
Yeah, I just don't. We don't talk about the
Like,
dollar.
it's not
we
like I
don't
can
talk
sell
about what moves it
2K
around.
unless I have a little order up.
It's
So-
just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the
gosh,
slight firming up of the
no.
language around
An
growth in the
SEP
labor market
question.
statement, should we assume that the timeline
This is
for
where
any
he's gonna
further
say
rate cuts
projection,
is
potentially.
pushed back compared to what people might have thought in December?
Wow, an SEP question? Are you serious?
First of all, if you look at the incoming data since the last meeting,
Please, we don't say
clear
SEP.
improvement in the outlook for growth. The data have come in, and
Shoot, that
sentiment,
might
the
rinse
Beige
us.
Book, everything comes in
Oh, Beige
suggesting
Book.
that this year starts
Wow.
off on a solid
Shoot,
footing
this is very risky for
growth.
projection.
Inflation performed about as expected, and as I mentioned, some of the labor market data came in
Am I able to sell this at
suggesting, evidence of stabilization. So it's overall a stronger forecast, really, if that's your question.
Oh, thank God.
I'm not sure I answered your question.
But in terms
did.
of timing or pacing of any additional easing?
So we haven't made, what we'd
Wow.
say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both
If he
sides of our
dodges
dual
this
mandate,
with saying
and we'll continue to make our decisions
SEP.
meeting by meeting based on the incoming data the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Wow, what a dodge, Powell, what a dodge. Oh my gosh, he didn't say SEP. What a freaking dodge.
Steve
Yes.
Leisman, CNBC, and sticking with questions you might answer. Thank you.
Don't ask more on the SEP, man.
You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the S&P and the longer run rate, 16 of 19
All right,
officials are
good.
actually
We got out of it at
below
68.
there
Someone
on their
bought.
long run.
Okay.
Is the Fed still in a process of bringing it down
Nice.
towards
Now
a
I feel
middle
better sizing that
range
down a
of
little bit.
neutral? And what would it take to get there?
So the count I did was
The reason he
that
normally
4
says
of the
median
19
is when he's
were
talking about his
at or
projections. He
above
doesn't have
that.
any new
Maybe
projections
I
at this
missed
speech.
by one,
That's
or
why I
thought
didn't
it
like
was 4. I thought it
medians.
was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy is
How low is stuff
significantly
getting?
restrictive at this time. It may be sort of loosely neutral,
Oh,
or
wow,
it may be
pandemic's
somewhat
getting very
restrictive. It's in the eye of the beholder, and of course, no one knows with any precision. If you had a follow-up.
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December,
Oh, man, he's saying, I love
most
saying
people had
SEP.
additional normalization. But at the same time, we've done
say
a lot of the
SEP,
process
don't
of
say
normalizing. A
projections.
good piece of it is
If
done
you don't
with
know,
75
SEP
basis
stands
points,
for
and before
Summary of
that,
Economic
100.
Projections.
It's 175
It's-
basis points we've
that's
cut
why-
since we began cutting in September of 2024. So you've moved now to, 3 the Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira.
Thank you, Chair Powell. Mara Mokway from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
He has not said uncertainty.
So
I mean,
there
I
was
don't have a
broad
big
support on the
position, to be
committee
honest.
for holding
So
today.
if
Broad, I
I
would
lose
say,
on uncertainty,
including
it's
among
whatever.
non-voters.
$400.
So that's where that was. Of course, some people didn't
I
wanna
only
cut
bought
and-
after it was in
and
his,
dissented, but committee
prepared remarks.
pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting.
Wow, he said-
What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook and all that.
Someone mocked
And,
this on dissented.
we're in a position where
Oh my God, I gotta set up.
we still have some
Stink no
tension
bid. Somebody
between
bonded.
employment and inflation, but it's less than it was. I think
Dissented.
that the upside risks
the
to
hell?
inflation and the downside risks to have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the 2 goals and how big those, and quantify them. And so there are different views on the committee.
I gotta
and,
set some.
We'll
bids
find our
when
way
he says
forward
these
as the
things.
data
Someone
evolve.
bought dissented.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically,
Kinda jumped.
there are many different
Okay,
estimates,
Bill.
and they're all highly uncertain. But most of the overrun
Uncertain.
in goods prices is from tariffs. And that's actually good news, because
someone
if it weren't
lied.
from tariffs, it might mean it's from demand.
On him saying uncertain.
And that's a harder problem to
uncertainty? I
solve.
don't know.
We do think tariffs are likely to move through and be a one-time price
probably
increase.
can't
So
anymore.
most of the overshoot, if you were to take that out, you'd get, and you would, I mean, inflation, core PCE inflation is running just a bit above 2%, x the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of
This is
tariffs
risky, trying to
flowing through
bid
goods
those.
prices, peaking, and then starting to come down, assuming there are no new major
People were just
tariff
buying-
increases that are begun.
It's way too early.
And that's what we expect to see over the course of this year. If we see that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge, or the data just get worse, we'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and
Someone's
things I can't speculate on.
Trying to go big on. Damn.
Howard.
I was hoping someone would try to mog Trump on my
Howard
question.
Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe
It's going
risks to both sides of the Band-Aid as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished, but they still exist. So there's still some tension between the mandates. Are they
Wow,
fully
president
in
is
balance?
getting really cheap. I don't think
Hard to
this is
say.
warranted.
Hard to say. And we think our policy's in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, a minute ago you said you felt expectations were consistent with your mandate, that the 2 and the 10-year break-evens.
All right, I just bought some
moved
presidents.
quite notably in the last
I think people,
couple of weeks, I believe.
I'm not saying he's going to say it,
Is there
but
any
people
concern
are
on that
mocking
front?
no president, because I think he's not going to talk about Trump, but he will say Reserve Bank presidents.
At all of the
He'll
both
say
survey and market-based
Reserve Bank
short-term
presidents.
inflation
So,
expectations
I don't
have
think it
come
makes
way
sense for
down.
this to be 20 cents.
They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time.
I will
So
buy this at like 16
expectations
cents just for the Reserve
have been
Bank
solid,
thing.
and they reflect confidence in the return to 2% inflation.
Andrew.
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that still true?
We haven't made. You're right. We saw the labor market weakening, and we acted. And I think that was the appropriate thing to do. We will always act to address what we see as the economy moving away from our goals. Risks to both of the variables are a little less. I think the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's
I don't
much
have
to
any
that.
opinion on tax, no, to be honest.
Thanks.
I'm more so just trying to get some what I think are cheap yeses.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things.
Uh,
And so there could be
it can last
combinations,
like an hour,
infinite numbers
usually,
of combinations that
probably
would
3:30.
cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says
This is Federal
the
Reserve's
rates
YouTube
are in a good
page.
place. We'll have to be making similar judgments, too, on inflation, though.
Oh, man. This one's
And
so
if
much higher.
inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now, anybody's base case, that the next move will be a rate hike. But, ultimately, we'll do what we think is the right thing. But that's not where people's expectations are right now.
Damn, this got so low. Tried to get some.
Hi, Victoria Guida with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term economic outlook.
Credit coming?
So do you worry that the U.S. could at some point find itself in a similar
credit?
situation to Japan, whether
Maybe?
for fiscal or demographic reasons?
Over time, you've seen that U.S. rates have remained they haven't moved a lot, really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is, uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path
Crypto Bitcoin
is
no on the
unsustainable.
Fed? What are you saying?
And the sooner we work on it, the better. But right now we're running a very large deficit at essentially full employment.
I see it.
And so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event, but ultimately it's something we'll have to deal with. And that in the end game, that's where you wind up, is in some kind of a difficult thing. But that's not where we are. It's not where Japan is either. But it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that longer-term rates have overall not really budged that much?
I wouldn't say that. The thing is, technically, higher longer-term rates means less accommodative financial conditions. But remember, many things move longer-term rates. It's not mostly what happens on the short end. There can be effects of longer-term rates from our moving our policy around, but it's much more assessments of the fiscal path and fiscal policies and risks and things like that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair, until this investigation into you is resolved. Do you support this move by the senator, and what conversations have you had with the senator?
I've got nothing for you on that.
More broadly, what would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
So really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, through an election cycle to affect the economy in a way that will be politically worthwhile. So I'm not talking about the U.S. context. This is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, first of all, it would be hard to restore the credibility of the institution if people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
Archie.
Come on, let's talk about the Reserve Bank presidents here.
Archie Hall from The Economist. On that sort of stabilization of the labor market question, how much do you see the weakening we saw over the past 6 months, year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labor market, do you think?
Is this going to be pandemic?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So
come on, go further back. Talk about the pandemic.
Were possible with that.
Dang, pandemic.
Supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that.
All right, we have some longer shot yeses that we can hopefully hit.
Things like, for example, just to pick a couple,
crazy amount.
The Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? But
I don't have a
It's
counter.
a survey showing that workers feel like job availability it's a very low reading. It's just one reading, but it's an indication of softening. People part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll job softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market. So imagine they both came down a lot to the point where there is no job growth. Is that full employment? In a sense, it is. If demand and supply are in balance, that you could say that's full employment. At the same time,
we got some pretty
really
GPSs
that's a maximum
tariff,
economy.
inflation, pandemic.
It's very challenging and quite unusual.
You're buying
situation.
pandemic? No, I would not buy pandemic.
And one
no.
more on growth and the kind of strong growth outlook.
Do what you want.
Strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook. You're right. It's financial conditions. And it's fiscal policy for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially the economy has once again surprised us with its strength, not for the first time. Consumer spending, although it's uneven across income categories, but consumer spending overall numbers are good. And we're benefiting from the AI build out of
AI
data centers. That's another thing we're benefiting.
How low
from,
did AI get?
The economy overall, the growth
stayed resilient
is on
in
a
the
solid
70s.
footing. It looks like, and it's not just those things. It's just the consumer is filling out surveys that sound really negative, and then spending. So there's been a disconnect for some time between downbeat surveys and reasonably good spending data.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven.
Oh, no, is this
the
a
president
consumer
calls
confidence
inflation
question?
defeated and solved. The FOMC
Tariff
says
inflation
it's a
coming
somewhat
here?
elevated
Come on.
inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues
Let's get some
about
tariff inflation
how
here, pal.
wealthier consumers seem to be driving so much of the economy, and why so many families still feel like they just can't make ends meet after 5 years of rising prices. What is that discussion like?
So a couple things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands, and they're buying less, and it's changing their buying habits and that kind of thing. So we're seeing that, and that is a reality of what we're seeing. They're still consuming, but they're feeling it in a different way. I would say more broadly on affordability, we have a vast network through the reserve banks and also through the Board of Governors, where we talk to small and large businesses and households, and so we do hear a lot about affordability, and we take that very seriously, and we take it to heart, because one of our jobs is price stability, and so the best thing we can do for people who are feeling that squeeze is to keep inflation under control, and frankly, to finish the job of getting inflation back down to 2%.
You mentioned the AI build-out as being a positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs, and how does that play into what you're watching about the labor market?
So everyone, of course, is watching AI and the deployment, and trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And of course, anyone who uses it is amazed at what it can accomplish, right? So
I think AI
every technological wave will eliminate some jobs and create other jobs. And it's always been the case. If you look back, wave after wave after wave, there will be some disruption, but ultimately technology increases productivity, which is the basis for rising wages. And it may not all happen immediately, but over time, it's what enables incomes to rise over time, is rising productivity. So and we always ask, well, this is going to be different, is it going to be different? And we don't know.
It's up to you, Avocado. I mean,
see in the short term jobs that are being eliminated by the capabilities.
Still another half hour of this guy talking. But
we just don't know what the overall effect is going to be. So how to think about it?
I don't have a large
position. In macroeconomic terms, it's very hard. We can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between the low hiring rate for recent college grads and AI.
I'm hoping pandemic gets to
the main or only driver. You hear large companies, though, many of them saying that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off.
You saw AI in the 30s?
They tend to refer to AI when they do that. So we're all watching and learning, and it could certainly have pretty significant effects on the economy, the workforce, and our society. We don't really have the tools to address the concerns that may arise, but we have a lot of people who focus on analyzing it and try to understand what the macroeconomic implications are, which is our job.
Thank you, Chair Powell. Bei from AFP News Agency. You mentioned earlier that on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, is your expectation still for inflation to start cooling in the second half of 2026? Wow. And if you could elaborate how far we are from target currently.
I did not realize it got that low.
Thank you.
See, these prices are so stupid
so
live.
How far we are from
He's obviously not going to say it in the open.
As I mentioned in my opening remarks, we had 3%, 3.0% core PCE inflation.
I should have had more yes bids
over
up.
the 12 months ending in December, and that's pretty much what we had the year before. So on net, no progress. But the story behind that is modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs, and ultimately we think those will not result in inflation as opposed to a one-time price increase. Okay, so that's where it is. In terms of, you asked, no one thinks they will, ex ante understand really clearly, precisely when this will happen.
I
But there's
think
an
president would
expectation
only
that
come
sometime
through, like I said,
in
Reserve
the
Bank
middle
president. That's the only
quarters of the
reason I'm
year,
like-
we'll see tariff inflation topping
Yes,
out.
tariff inflation.
what
right
we
there,
do
dude.
is
We got that at
when
15 cents.
tariff
That's what I'm
is
talking
put in
about. I can't
place,
believe that got to 15
we
cents.
track the
Th-
effect of
These
those
prices are so
tariffs
crazy live.
over
Yes.
6, 7,
All
8,
right.
9 month
Sick.
period, and you can see
15
and
cents,
you can see
150 to
before
1,000.
that
Let's
tariff,
go.
How long it takes to
I
reach a
can't
place
believe
where
how these
it's
prices get
affected the
live,
price
man. These are
level, and
so
that's it.
insanity.
So
Now
we're
I
getting
feel
better
good
at
about
that,
buying
and
these live.
our
Thank
estimate
God.
is that it'll be
All right.
sometime in the middle of the year, but I wouldn't look for
This
great
is going
precision in
very
that.
well.
But, we'll be able to see whether things are moving in that direction. I think, we'll be able to see.
We hit at least one of our long shots. Now let's see if we can get some more pandemic yeses.
Thanks, Chair
as this
Powell.
gets
I'm
into
Richard Escobedo with
teens.
CBS News.
And
I
then
want to look outside the
hopefully
U.S.
get a pandemic
about what's happening
hit.
outside our shores and how it impacts the U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how
can't
you're
believe
thinking
people are
about
buying those
geopolitical
85.
risk as it relates to the U.S. economy.
So I can't comment on that speech or statement or anything like that. Geopolitical risk for us is, a lot of it is around energy, oil. And so far we haven't, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. Longer than that, it's trade, and the trade, the economy, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way that what was implemented was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate, and in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter. So,
wow,
that's where that is.
That was a risk for trade war right there.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With third quarter GDP growing at 4.4% and the fourth quarter expected to have a 5 handle on it as to what the Atlanta Fed is predicting, at a time when you had a government shutdown and we thought that was going to shave off some growth, you've also got the fiscal tailwinds you've talked about, big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well, we didn't cut rates today, but it depends on how fast potential output is growing, right? I'm just asking in principle. I'm not saying this is what's happening, but there's growth and there's how fast the potential is growing, and at a time of high productivity growth, potential output is rising. So it really matters whether potential output is growing as fast as actual output, and it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months because quarterly GDP can be very lumpy. GDP was negative in the first quarter last year. So the overall, over the year, the numbers were nothing like that. It was more in the mid-twos for the year.
And how do you explain the divide right now between
Pandemic's
strong
not
economic
really getting
growth
that well.
and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So there has been, you're right, there has been a divide of solid growth, but what looked like a weakening labor market. And
Tax
that
no
can
at
be
36.
explained by,
Yeah, it's weird he's
by
like weaving it.
rising productivity. But I would say we do see signs of, certainly of the unemployment rate stabilizing.
Oh, nice.
So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end, the labor market data is more reliable. GDP data is very hard to collect and understand, but nonetheless, I think we may be seeing that tension resolving a little bit. Too soon to say with any confidence, though.
Matt Egan.
Matt Egan with CNN. Chair Powell, after today, you have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under multiple presidents. I'm wondering what advice you have for whoever your successor might be.
Pandemic?
Honestly, I'd say a couple of things. One is stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Another is that, our window into democratic accountability is Congress. And it's not a passive burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy,
and we don't deserve
Powell by your interactions with our elected overseers. And so it's something you need to work hard at, and I have worked hard at it. So, and the last thing is, it's easy to criticize government institutions so many ways. I will tell whoever it is, you're about to meet the most qualified group of people you not only have ever worked with, you will ever work with.
Yeah, he really does.
And when you meet Fed staff, and not everybody's perfect, but there isn't a better cadre of professionals more dedicated to the public well-being than work at the Fed.
Thanks for that answer. If I may follow up, as I'm sure you've noticed, gold and silver prices have experienced historic gains of late.
Potentially gold.
And I'm wondering how much attention, if any, you pay to those moves, and what message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Nicole, for the
somebody
last question.
beat me to 90. Oh, I gotta get out of my.
Hi, Nicole Goodkind Barron's.
Did they say last question?
Prominent critics have charged that the Fed's economic models are somewhat backward-looking,
No, they
but
didn't
should
say
be more
last question,
forward-looking,
right?
incorporating
Should be
things
very
like
early for them to
productivity
do.
increases from AI.
Last
How do you
question.
incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
Yeah, so
maybe they did say last question.
By
Am I
and
crazy?
large, those criticisms, as somebody on the inside,
Yeah,
they
I
just
guess they
don't make
did. I
sense,
should
and
have
I'll tell you
clicked.
why. Every FOMC participant writes down a forecast every quarter, right? The summary of economic projections.
There's
And that's the
projection.
basis
No.
for how we think about the economy.
No.
So, and the other thing is, what an economic model can do
Wow.
is it can grind
Crazy
up all the data for the
projections.
last number of years, 50 years, let's say, and it can identify what
Wow.
are the relationships
Last
between
question.
variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy.
Crazy.
That's just the way it works. However, the structure of the macroeconomy is constantly changing.
Wow, that's such
For
a
example, we
brutal
hadn't had a pandemic
hit.
in 100 years.
Pandemic!
It wasn't
There's
in the model, and we knew it from the very beginning. It was not in the
Oh
model.
my God.
A trade war of this
Trade war!
scope. We've
Holy
never had that
shit.
in 100 years. And so there's great uncertainty at
Uncertainty!
different points.
Dude, what is happening?
Another thing
Bro.
I'll say is, when it comes to
Just hit like
technological developments,
100 strikes right in the
raise
last
potential output,
second,
sometimes
dude.
technological renovation, revolution.
What the
like happened
hell?
In the 90s here, and like maybe happening now with AI. We're all over that, and
That was
everyone studies those periods, and we're
insane.
very clear-eyed about the possibility.
Dude,
that this
he
higher
just hit
productivity may
everything in the
persist,
last few seconds.
and
Trade war
also that it may
projections,
not.
uncertainty.
We're not. No one's sitting here unaware of the possibility of higher productivity. We've been talking about it for
What the
3 years.
hell,
It
man?
long
Do
predates
not
the
bond
current
nose
situation. It's
early,
been
man.
going
Let
on
me
for
tell you, if
5
this
or
is
6
not a good
years, we've
lesson.
had productivity higher. We've been talking about it
Wow.
the whole time. So
Who
it's
got
very
those
much on our
clicks? I
minds,
need to
and
know.
We are well aware that higher productivity means higher potential output.
Who the hell
and
got
it
those?
changes the way you think
Dude,
about
I was
potentially
so feeling so
inflation,
good on
growth, labor market, and all those
pandemic.
things. That's
Wow,
all
if
in
we
our
could have held
models.
on projection though.
I mean, if it's just a question of using better models, bring them on. Where are they? We'll take them. But I think, we certainly are in contact with anybody who does economic modeling, and we're always looking to do better at that. But that's how I think about that.
And just a quick follow-up. We've been talking a lot about tariffs and passing through, and we've been talking a lot about them for the past few months.
Could he
the
sneak in
trade landscape
projection
is
at the
still
end?
in a constant state of flux.
I don't think it was Foster, it's
Announcements,
probably
threats,
Bip Up. I'm gonna
negotiations
ask
are all
Bip Up.
frequently changing. So I'm wondering how you actually track these, what data channels are most critical to follow this in real time.
Whoever got those clicks,
Trade?
man, that was
Yeah, the
thousands and
impact of
thousands of
tariffs and how
dollars.
they're
Like,
changing.
holy shit. I want to know who got
I
those.
think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place, you can pretty much track its effects on pricing and on everything, and so you build a model up from all of the tariffs. At the beginning, it was very much of a forecast. Now it's every cycle that goes by, it becomes more informed by actual data. And
Everything that I wanted to know before speech started, except
our
for tariff
forecasts were
inflation,
not
has held
far
as of
off.
now. Wow.
What changed was, as I think I said earlier, what was implemented was smaller than what was announced. In addition, we didn't see
Renovation? What is
retaliation
happening for
internationally, and I
renovation?
think people did generally expect that because we saw that in the past, and that really mattered too.
Does someone think
And
it
then
was
the other
said?
thing
Was
is
it
the
missed?
pass-through, didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the middle would take, and how much the consumer would take. And it turns out it's a lot of companies in the middle who, by the way, are pretty strongly committed to passing the rest of it through, which is one of the reasons why we need to keep our eye on inflation and not declare victory prematurely.
Thank you.
All right.
Done?
We're done.
Okay. Thank you very much.
Wow. Absolute insane. Dude. Dude, Powell, literally, in the last second, he just hit so many strikes. Like, trade war was at... Dude, trade war was literally, like, basically bonded no, because he said one more question. He hit trade war. How much volume was there? 45K in open interest. Holy shit, I'm talking to the person who got the click. They made 30K on those clicks. Someone who automated it. As you guys know, I've talked about it, how there are people that run scripts to like fast click this. I'm talking to the person, I won't name them, but they made 30K. That's absolutely insane. I mean, that was crazy. People were bonding no's too early. Wow, what the hell? That's absolute insanity. The last question, he just rambled through a ton of unrelated things. I guess renovation. All right, let's see renovation. I gotta play it back. We must have missed it. Let's see if we can find renovation
If you
live.
look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over
Let's see if we can find it.
particular asset price changes, although we do monitor them, of course.
Nicole, for the last question.
Okay.
Hi, Nicole Gutkind-Barons. Some prominent critics have charged that the Fed's economic models are somewhat backward-looking, but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate
Let me
current and
see
future
if we
developments into
can
your analysis and
figure out.
decision-making, and do you have an answer to those critics?
Yeah, so by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why. Every FOMC participant writes down a forecast every quarter, right? The summary of economic projections, and that's the basis for how we think about the economy.
Like the
So,
last answer here,
and
or
the other
even
thing is,
after this? Am I playing the right
like
one,
what
Dustin?
an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. It wasn't in the model, and we knew it from the very beginning. It was not in the model. A trade war of this scope, we'd never had that. that in 100 years. And so there's great uncertainty at different points. Another thing I'll say is, when it comes to technological developments that raise potential output, some kind of technological revolution.
Oh my gosh.
Technological developments that raise potential output, some kind of technological renovation.
Oh, I don't think that counts. Wow. Let's play this slow.
Put some kind of technological renovation,
Oh, actually, maybe that is it right here.
Put some kind of technological renovation,
Technological renovation, Is that?
Put some kind of technological renovation,
Wow.
Put some kind of technological renovation,
Ooh. Kind of sounds like he does hit it. I'm not going to lie. But let's see. I don't know.
Some kind of technological renovation,
Renovation, He almost didn't finish the N. I don't know, man. I'm not going to participate personally. I don't think shit, I don't know. Does
revolution like happened in the 90s here and maybe happening in the revolution technological renovation,
I don't know. I would maybe buy Cheap Nose. Because it's kind of unintelligible. Maybe just for fun. But I don't usually get... I don't know. A lot of people are saying it counts. So, I don't know. I'm not going to get involved. This is probably going to get paused pretty soon, but... Seems like he did say renovation, people are saying. Look, even if he misspeaks, if he says renovation, it has to go yes, But so I don't know. I don't know how they're gonna rule it. But look, dude, we did pretty damn well. Not gonna lie. Cool, plus 1600. This could have been so much better too. But let's go. Oh, I tried to get more pandemic, dude. I can't believe I didn't fill my yes pandemic shares. How long is it gonna take to grade it? I think at least a day. It's going to be a tough ruling. That's bizarre. Every time you think that you can solve all the disputes with mention markets, stuff like that just happens. I mean, how bizarre was that? That was a crazy Powell speech, though. All those buzzer beaters. I really need to automate bonding mentions. But look at that. We'll take it, man. We will take it. And I'm glad I sold out of half my projection, too. I played this pretty damn well, buying some cheap yeses and stuff like that. I need to do that even more next time. Tariff inflation with how low it got. I should have just sized up. Why am I doing just buying 1K? But whatever. Who knows, Yeah, dude, you got to learn to automate. Got a vibe code, If he didn't hit that buzzer beater projection, we would have hit almost 3K this speech. That's crazy. But all right. Yeah, I could have done way better live trading this, though. So I'm honestly not that happy. But, I can't complain with a good win. We'll take it. Wow. What a damn speech. That's one of the best Powell FOMC meetings we've had in a while. All right. We're going to wrap it there. We might be back later today or Friday. We have a big guest we're going to be interviewing, so stay tuned. But ladies and gentlemen, trading's paused, by the way. Thank you for tuning in. That was a lot of fun. I love these freaking Powell meetings. GG's all. Take care.